Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, who just dropped his pen to start off the show. Welcome, and it's another Thursday, the final Thursday of the month. Franklin, hello. NVIDIA, you got it. Nestor, hello. Larry, hello. Give us some positive news, Bob. I think I have some positive news. What I'm going to talk about tonight is the proximate cause of the sell-off. Why did we fade today? And then, of course, we're going to segue into the weekly stock charts. How do we appear poised to close out the week? And we'll take some stock chart requests. I already have a bunch to go over, but I'll try to get as many as possible. And I'll do all of members' requests, no matter how long it takes. Okay, so let's get to it. You just caught me doing a scan here. While we wait for people to come in, I just ran a scan of a pierce of the lower band of the third standard deviation Bollinger Band on the Russell 2000. And these are two swing trades that I'm looking at tomorrow. Neither of these stocks I've ever heard of. One is BWFG, Bankwell Financial. If you bring it up on a 4-hour chart, you'll see that it was rejected after trying to recapture a support level today, and it broke down hard. So if they lean into it again tomorrow morning, this is one where if we have a support level below, we'll be looking to enter a trade for a very quick scalp, in, out. And another one here that came up is STRS. Now this one also is trading down below the third standard deviation Bollinger Band. We have a few volume shelves below. I'm liking the 1753 mark as a potential bounce if they gap it down tomorrow. So I like these two as potential very, very short-term swing trades. I got to write these down so I don't forget. I'll come back later tonight and do some alerts. For those folks not familiar, we're using TrendSpider for stock chart request. If you enjoy the program, if you get value out of it, use the link below, 35% off. Always off for me. Use that discount code CON35. It's in the description area. Let's talk about this market. Hi, Tricia. Suresh. Hello, sir. Let's talk about the market. What's driving the market? Let's go to headlines first. This is what it's all about right here. Is not this particular headline, but when this headline came out, you saw the market sell off of its highs. Is that the only reason why? No, I think we're probing for a bottom. You still have people with margin calls out there, how to get satisfied. So there's forced liquidation as well that we had to contend with. But the proximate cause of this sell-off and the strength in the U.S. dollar is a couple of fold. One, you're seeing the spike in coronavirus over in the EU. So that's causing the euro to drop. And they have their own turmoil going on over there. Add to that, here in the United States, we're trying to, or the Congress, I should say, Congress and the administration are trying to reach a negotiation on a massive additional bailout. We're moving towards MMT. MMT is modern monetary theory. Basically, what the Federal Reserve is going to do is they're just going to deposit money. One day you're going to wake up. I don't know what the threshold is for your annual income. I sure as heck didn't see a dime of any bailout money of late. But you're just going to wake up one day, and if you're within that threshold, you're going to have, I don't know how much money in your bank account, but it's going to be there. That's MMT. So when you hear about this, what is modern monetary theory? That's it. It's the government coming around with helicopter money. And that's what it's all about. So longer term, do I think that the rally in the U.S. dollar is sustainable? No, I don't. I think it's a short covering rally, but what's driving the strength in the U.S. dollar higher and forcing the market lower is the lack of a stimulus package. You're not getting good audio? Is it everybody not getting good audio? Just let me know if that's... try to refresh your screen, Eric. I hear that helps at times. Welcome aboard, by the way. I'll try to get closer to the mic. Let me know if that helps. So, long story short, the lack of a... If they come out tomorrow with a $1.5–2 trillion bailout bin, and these are the numbers we're talking about, you're going to see the dollar crash. It's going to collapse. It's another $1.5–2 trillion on the balance sheet. The market is waiting for that. Add to it the weakness early on in the month and into this week, of course, was that you saw, this is the Fed's balance sheet. I'll drop this into the chat box. You've actually seen prior to this week, the last time I brought this up was, I think around here. And we had come off considerably off the highs, not considerably, but when you're talking about $100 billion off the highs, it's a drop in the bucket in the debt world. But you can see that this week we are picking up steam. The Federal Reserve is back in action. This is reported as of yesterday. They took a hiatus. The market was able to rally on its own. Then it faltered. Now the Federal Reserve is back in there doing what they do. So this is partly good news. I think they will reach a deal. Now, will it be before the election? I don't know. I think the administration is going to have to cave into pretty much all the demands of Nancy Pelosi, and her number that she's trying to get is $3 trillion. And they may just have to go for it. Because the president knows that he cannot have the stock market dropping like a rock into election day. Because while there's a saying out there that the stock market is not the economy, that's ridiculous. To the everyday worker with a 401k IRA, they're not looking at Fred. Right? They're not doing it. What they're doing is they're going into Fidelity, Vanguard. They're taking a look at how their 401ks and their annuities are doing. And therefore, the stock market is the economy in their world, and that's all that matters because they're voters. So, will they reach a consensus? The administration is going to have to pay. And the fact that there were no scheduled talks did not bode well for the markets today, and that's why you saw partially a sell-off. But again, you had margin calls, typical panic selling at the bottom. If this is a bottom, we're going to go to the weekly charts. We'll talk about it. And as a matter of fact, let's do that now. Okay. Sorry, folks. So we'll begin with the Pimp Mac Daddy of charts for, let's start with the monthly chart first, for this week. And that is the U.S. dollar. Now, the U.S. dollar, were we to have closed out the month today, this would be one heck of a outside reversal month. A huge reversal off the lows. I mean, big move here. Nearly, just say it's 2.33% higher. That's a big move for a currency in a month. We have completely engulfed last month's price action. We undercut it. Now we closed out the day above it. And we are back above critical support. So what the markets are seeing is a dollar that's strengthening. What happens when the dollar strengthens? Well, it's not good for commodities, number one. Number two, our manufacturers who benefit from a weaker U.S. dollar because their goods are more affordable overseas, those goods become more expensive overseas. So it's not good for the manufacturers. It's good for the consumer, but not good for the manufacturers. So, in short, this is a very bullish chart. The markets are seeing it. And when you drill down to a weekly chart, this is where I think that there's a possibility that what we're seeing here is a short covering rally. Granted, we have a breakout We have a lot of resistance above. At current, we're above one of those resistance levels at 25.38 on the UUP. And we hit resistance at 25.56 on a weekly chart. That is resistance. So we closed out the day at 25.48 daily chart. Let's just see how is the quality of the close today. So while we were down on the day, this is not necessarily a bearish chart. In my mind, what we're doing here is, and I mentioned this last night to members, that we were close to the third standard deviation Bollinger Band. If they gapped it up, I would step in and buy back some of our gold miners, or in fact, we bought back all of our gold miners today. We didn't gap up. However, we did pull back. We saw a drop in the GDXJ, the gold mining ETF. We bought back our position that we stopped out of earlier in the week, and thank God we did. We got it at a cheaper price. It's always nice. Now we just have to hope that that's the low. So what we did here is we broke out yesterday, pulled back today, retest of support. It held. So that's why I'm saying that this is, while we were down today, it's not sorry for that. It's not a bearish chart. So the trend at current short term remains higher. Longer term, going back to the monthly chart, we're still in a downtrend, and the month isn't over yet. So tomorrow is going to be a key day, because if we close at the highs of the week tomorrow or above 25, what was the high? 25.55. We close above that mark. That's not good as we proceed into the new trading week. That would be a breakout. In all likelihood, we'll see a continuation move higher next week, and that won't bode well for stocks and particular commodities. So very important, the U.S. dollar right now. All right, let's talk about bonds. I spoke about this last night with members. We were talking about what I thought would be a pop higher today. We had a bullish key reversal off of a lower band of support. And we've been consolidating in this wedge formation for quite some time. And I'm going to tell you why this matters in a moment. And I think that, how was volume today? Volume rose, but still below average. I think that we are going to break out on the 20-year bond ETF. We have broken out. This is in the books now. We have broken out on Stokes. We have a higher low. Momentum is beginning to build in the bond market. Remember earlier, I brought up a chart of the Federal Reserve's balance sheet. It is rising. Is it any wonder why bonds are catching a bid? What does that mean, and why is that optimistic for stocks? It means yields are going to go lower if we break out on bonds. That's also good for commodities. If you get a breakdown in yields, well, even if the dollar stayed par with where it is at current, or even has a slight bid to it, a move higher, if you have yields dropping down, it's like an offset. So it's not as much of a headwind for gold and silver to maintain support, perhaps even rally a bit, but it's too early to make that call yet. We haven't broken out on price quite yet, but I'll tell you, when you take a look at a weekly chart of the 10-year yield, what I always like to say when I do Thursday night stock charts live and I review weekly charts, I always like to remind people that one day makes a big, big difference, because I'll be revisiting these charts on Saturday with members when we do the week ahead commentary and we review the closing price action of the major averages, and then we plan our strategy for the coming week. I can't tell you how many times I must say it on the week ahead commentary on Saturday, how much different the weekly charts look from Thursday night to Saturday. So one day means a lot. That being said, that's my long-winded segue into, we broke out on the 10-year yield last week. This week, we have a breakout point failure. If we would have closed out today or the week today, this would be one bearish chart. It's still bearish, but the week isn't over. For all I know, bonds drop tomorrow, yields spike, and we close above this upper band of resistance just like we did last week. That'll be good for the banks. The banks are getting killed this week with everything else. So this setup here is good for technology. It's good for the overall market, ex financials. So let's keep a close eye on this. It matters. And what also is going to influence the U.S. dollar is the rise, the new resumption of the build in the Federal Reserve's balance sheet. Tips, weekly chart, Treasury inflation protected securities. Now, they're down on the week, but slightly, not bad. We haven't broken support yet. Volume is up there. Trish, yes, doesn't sound good. It doesn't sound good still? Doesn't sound good? Damn. I'm checking my mic now. I don't know what to do to help that. It may be a stream health issue. It says it's good. All right, sorry if the audio is bad, folks. I'll try to figure it out offline. Sound is making the speakers fold. Wow. This any better? No, it's the same. It's on the same project. It's on the same setting I always use. All right. Sorry about that, folks. I'll try to speak lower. Is it very loud? All right. Let's try to get through this. The VIX weekly chart. We have retested for the second consecutive week 25, and it's held. Yeah, this is a worry here. What we did is we broke out on the ultimate oscillator, pulled back, retested, held. We're moving up higher. So we're seeing higher lows on the indicators, but price matters most. Let's see how we close out the day. Down on the day. We bounced off of support, resistance. Jury's out here. Stokes is still weak. RSI is back above 50 and holding. Jury's out. The Dow Transports. I always treat the Dow Transports as a leading index, and it sent us a signal last week with this topping action after making new all-time highs. And we have pulled back. We need to hold 11,091 on the Dow Transports. If we don't, it's a breakout point failure. The Dow Jones has broken support. We need to close above 26,984 on the Dow. Copper, I'll bring it up. Definitely leading. Very good point. S&P 500 weekly chart. We bounced off of support, which is good to see. What's not good to see is we're breaking down to lower lows on Ultimate Oscillator. Let's drill down to a daily chart. Volume was light today. Two-hour chart. We really need to get a washout. I would love to see them flush the futures down tomorrow morning. Tap this 3209 mark yet again. Maybe even lower down here to 3200. And then reverse it. And that'll wash out a lot of the weaker hands. IWM weekly chart, small caps. A huge breakdown this week on the small caps. I mean, horrible. We were in a nice flag formation. We were rejected on the breakout last week. This week, hammered. What are we down? Over 5.5% on the week alone. We tapped support today, rallied. Let's go to a daily chart, see how they closed out. Didn't want that. Doji formation today. A sign of indecision. We may get a pop on the small caps. Volume was very, very good today. The banks, horrific week. Think about this. The XLF, the banking sector, is down about the same as the volatile Russell 2000. That's amazing. Volume's fairly muted. But if yields continue lower, expect more damage in the banks. Technology closed down on the day. Usually, though, when you see a hollow candlestick like this, usually what it means is that you have indecision. We've pulled back. I think that odds favor longs going into tomorrow. Might there be a morning sell-off? Quite possibly. But I think that we're at a point where we're finding some buyers move in here. The problem is these guys up here. See these wicks on top of these candlesticks? Those are sellers. Those are now resistance levels. Now, it's not heavy resistance because we didn't spend much time at those levels. So I think they're going to be easily overcome. But the question, if we do begin to rally, and I think it's only going to happen on declining yields, is do we put in a lower high or do we break out? Key question. The other thing is that these Stokes are very rapidly nearing the 50 mark. And when Stokes begin to trade down below the 50 mark, I always pull out my old saying, and that's rallies tend to fade. And I would not be a buyer of the rallies. I wouldn't be a buyer of the dips unless I'm going to very short-term swing trade, in and out to scalp. But be very careful. This is entering danger zone territory if it does not pop very, very soon. Daily chart. Now, we did manage to recapture support. We closed down below it yesterday, right at 110.14 thereabouts. Actually, no, wrong. Let's call it 110.97. And we recaptured it today. We need to see a retest. If it holds, we may rally. Volume is good. The semis, weekly chart. Not a bad week. Yeah, I have to say it. Not a bad week whatsoever. Down just over a half percentage point, nearly 6%. How's our volume? It's not that bad. It's just not that bad. Daily chart. I see good things happening here. So what's jumping out at me is that, I mean, this has been really an orderly consolidation and a correction in the semis. And what I like is that we're putting in higher lows, and we've now broken out on our Stokes. So momentum is beginning to build to the positive. Very early stages, but you're seeing it reflected on other indicators as well. Volume good. Would really like to see a breakout on RSI, have it close back above the 50 mark. So I'm going to go over NVIDIA. That's one of my favorite plays for Franklin in a moment. Trader Isaac. Haven't seen you in a while. Yes, thank you. Please smash the like button. Please. Thank you. I need you guys. YouTube is going to throw me off for not pitching my channel enough. That's why I only have 2,300 subscribers. All right, biotechs. Horrible week. Great week last week. I thought we were breaking out. Horrible week. Avoid. Let's not spend time here. Energy. Horrible week. Down over 8.5% on the week. I got to tell you, I got to look at the energy sector because it's so beaten up. ExxonMobil is now yielding over 10% on their dividend. Close to a doji formation. I'll probably be in there buying more ExxonMobil tomorrow. Because when they open up this economy full blast, and it's not going to happen until after the election, you're going to see these cyclicals rip. Oil, how's that doing? Weekly chart, inside week, no new high, no new low. Stokes appear to be attempting to flatten out. You really need to see oil firm up for the energy sector to firm up. And it is firming up. So let's go over this for a second. If oil rallies in all probability, especially with the dollar behaving strong, the market will follow suit. Oil is very important. very close to a breakout. We have higher lows here. Stokes are beginning to break out. We have higher lows on our RSI and on Stokes. Good stuff. Would I be a buyer right here, right now? No, I would wait for the breakout, given this iffy market. But it's looking good. So I forget who asked for good news. I think we're seeing some good signs here. Emerging markets, not so much. I own emerging markets. I'm going to buy more emerging markets. Not with the dollar strong, though. I want to see a weak dollar. When I see the dollar begin to top out, then I'm going in a very big way on emerging markets. Vietnam, been waiting for pullback there. It's strong. We started talking about Vietnam back here because the prediction I have with regards to the reason why we're buying steel, buying ExxonMobil, buying commodities. The reason why is that the build out of infrastructure in the Asian economies. You had Mike Pompeo down in South America talking to them about an exodus of manufacturing out of China into other countries, hopefully our own as well. And Vietnam is going to be a beneficiary, as is India. Let's bring up a chart of copper. Hey, Will. Tesla is my canary in the coal mine for the market. Okay. Gold heading to 1800 and a wash to 1700s. We'll go over gold. All right, copper. Not great. I think all we need to do here is take note of how far copper has come. All right, this is a monthly chart of copper. Copper broke out back here in July out of this big flag formation. So while the daily chart doesn't look good, the talk of global contraction is out there, blah, 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 blah. Copper's in a breakout mode, longer term. This is the macro view. Can we pull back and correct and retest the breakout point? Sure. But I think longer term, copper is sending us a signal that we are seeing global strength for this commodity. And that means that something's getting built. That's why they use copper. So this is a good sign. So that's another good sign. Yes. Well, we're down on the month. No big deal. All right, to gold. Gold 1800. Maybe. What was your price target? Wash to 7. Nah, that's too much. It's not. I don't think it's going down to 1700s. But I could be wrong. Open-minded, not being arrogant. Let's take a look at support. What I will give you on this is when you take a look at a monthly chart, monthly chart of gold, it's concerning to say the least, because if we fail to rally back and close above 1923 by the end of the month, it's a breakout point failure. It's a bull trap. And that's when I would get very, very concerned about gold. I don't want to sell premium right now because I don't want to be locked into anything, because I certainly don't want to be naked. So I can't use a stop loss. I can't exit. I'd rather just, in a situation where the market's under pressure, I don't like to sell covered calls. I like to sell covered calls in a market that's in a bull run, and that way I'm not fighting the market. Sometimes people sell covered calls and the market just begins to correct, and granted, they'll bring in maybe 6% premium, but then their stock is down 10%. What's the value there? And God forbid you're on margin, you're getting a margin call. So I try not to do it when the market's under pressure. So that's my answer. Okay. So watch out for gold. Gold needs to rally back. We need to see it close back above 1923, spot 70. Has to close above it. Or else I may be saying gold 1700. But right now I think it's a little bit too early to make that call. Daily chart. Bullish key reversal on the day, but one day does not make a trend. I bought our gold mining position back. If I see a rally and it begins to fail, I'll sell that position and book profits really quick again. Because I'm still nervous that we're still probing for a bottom. The reversal was not off of a truly significant support level. Let's go back in time here again. Maybe I'm missing it. No, no real significant, no compelling reason why we bounced off of a number, with the exception of it's the rising 20 period moving average and 1850. Other than that, there's no platoon of buyers down there waiting to buy at that price point, I don't think. So I'm still nervous about gold. We were oversold going into the day. We may rally yet again. We'll watch and see whether or not it fades. If it fades, I'll sell that half position again. The GDXJ, this is our gold miners. Good rally back. We closed out the day today back above weekly support. This is very, very bullish. Daily chart. So we stopped out here on the 21st, half of our position. I still had a half a position going into this morning. As we began to reverse off the lows of the day, I knew that we closed out the day and we were opening up the day into the third standard deviation Bollinger Band. That's what gave me the cojones to go back in there and buy that entire position back. So if this weekly support fails, I'll have to stop out. So a good day. We're still probing the bottom here. I don't think that we're going skyrocketing back up tomorrow. But as long as we hold weekly support, I'm good. Eric. BA at 146. Remember I said 120 for BA a while back, Bob? March? Are you talking about March? Around there? If so, I can't remember what I had for breakfast this morning. So no, I'm not completely aware. Dow theory. I'm not sure what that has to do with gold. The Dow theory. That's transports and the Dow Jones Industrial Average. All right, let's move on. Silver. Annihilated. I want to buy more. Nice reversal day today. Big volume. What else do we have? Uranium. I'd like to see it. We're long of uranium. I'd like to see it close above support tomorrow. How do we close out the day today? Off the highs of the day. But okay. What else do we have? That's the banks. We're watching the re-enter Intercontinental Exchange. Okay. Let's do some chart requests. It's 6:40 already. Wow. All right. Take that off. All right. First symbol up. Apple. All right. For the month, we're trading down below a support level. We may rally back and recapture that, though. 109.67 is the number to watch. The weekly price action is not good. We are off the lows of the week, but we're well off the highs of the week. 109.67 is the number to watch. Remember, I drew this a couple of weeks ago, this potential head and shoulders setup on RSI, and sure enough, it broke. Daily chart. Not a good day today. I mean, we closed off the lows of the day. We closed up on the day, nearly 3%. You may be saying, well, you're nuts. What matters most is, did we recapture support? That's all I care about. Did we recapture support? We didn't. We were rejected. So therefore, I remain bearish on the shares. And if we break through a new daily or weekly low, we're going down to around 99 bucks a share on Apple. So let's see how we close out the day. 4-hour chart. Look at this. Horrible. It recaptured support this morning, failed to hold it into the close. I don't like it. Let it recapture 109.67. We'll revisit it as a potential long. Tesla. All right, we're off the lows of the month. Weekly chart. We really need to hold 386.69 on the week. It's been support before. It's been resistance before. Now it's support at the close today. Daily chart. Very similar to Apple on a daily basis, where we broke support, rallied, tried to recapture, we were rejected. Up over 6.5% on the day. How do we close? It's all about the close. Not a bad close. Not as bad as Apple. So I'm iffy on Tesla. Yeah, just barely closed above support. Just barely. Take note of these Stokes. Down below 50, rallies tend to fade. One day does not make a rally. So until this is resolved, I'm very big on stochastics. Until this is resolved, and they hook back up, I would avoid it. Spotify, this is for Nestor. BA will? Okay. Spotify, I don't like what's going on with that company. That Rogan deal looks like it's, good, judging by, forget about the monthly chart. This is bad. Outside reversal month. The Rogan deal, Joe Rogan deal, if the media has it half right, It sounds like it's a cluster F. $220 spot 3.3 is good support. Stokes are very weak and getting weaker on a weekly basis. Daily chart. I would buy Spotify if you're going to swing trade it. Be careful of getting long-term bullish on this, because monthly chart, outside reversal month, bearish. Weekly chart, down on the week, Stokes declining down below 50, bearish chart. Now the daily chart is implying that we may be setting up for a pop. That's it. That's it. So wait for a breakout above this upper band of resistance at around 224 spot 05, or a pullback and a test of 219, 219.17. I'm not going to trade it. I liked the deal. I don't like companies where you have your employees unioning up and telling management what to do with their talent. I can't invest in that. So there's a saying out there. I'm sure everybody's heard it. Get woke, go broke. Not with my money. So Spotify I need to avoid until this Rogan situation is resolved. And think about, it's not just Joe Rogan. Think about all the other independent talent they want to lure in with a licensing deal off of YouTube or wherever. Those guys are looking at the Rogan deal saying, no way you're going to censor me. I'm free right now. So that's bad for Spotify, longer term. It's not just about Rogan. It's the precedent. So management really needs to lower the hammer on these employees that are stirring the pot, as it were. NVIDIA. Broke support. I love NVIDIA. We know the semis are firming up nicely. But we have broken down below support. The next support level truly is at 332. Weekly chart. Struggling. It's really struggling. See, this often happens. You break down below support, the following period, whether it's a weekly chart, monthly chart, daily chart, 4-hour chart, whatever. You break down below support, you get a rally back the following period, trying to recapture. What happens? Stalls, fails. So I would be very careful here. I would love to be the deliverer of good news on NVIDIA. Technically, if I wanted to be a real bear here, let's remove this. I could do this. If we fail to hold this support level at around 480, let's call it 489, the share, that's a problem for NVIDIA. But it looks like we probably will. One trading day left to go. Daily chart. I like the Stokes. You have a W formation forming here. So it looks as though it's setting up possibly for a short-term pop. But I think it's just going to be that. RSI broke out today. A short-term pop. So what do we need to see? I need to see a close. Ugh, hate that. I would be interested on a close above 503. And I would also be interested as much as I hate to say it, if we break to a new daily low, the shares become a short. Okay, the jury's out. I wouldn't buy it here. You'd be buying right into resistance. I would rather wait for a pullback and a bounce off of support down here at 479 or a breakout above 503. That's my take. Boeing. All right, so Boeing, I think what we're doing here, it's not a pretty chart, but I think what we're doing here is that we are busting my chops tonight. All right, we're at current breaking down below support on a monthly basis. I think we're trying to find a higher low. And we could be very close to that point, right at this volume shelf. And guess what? That's exactly where we bounced off of today. So the question then becomes, are we putting in a higher low on Boeing? And I was listening to an interview with some guy on CNBC, and I'm not into fundamentals. I'm not. But I have spoken about their defense business, their consumer business, the commercial jets. That's dead right now. But you're getting, for this price, for this multiple, you're getting their commercial business for free. Because if you break out the defense business, it's priced for simply that defense business. So once that other business starts to turn around again and pick back up, there should be a lot of upside here. We're down over 60% on the price year over year, or this year I should say. Do I think that we're done going down? This chart does not imply that to me. We may be done going down, but it does not imply that to me. So while I'd like to believe what the guy has to say, the charts aren't picking it up yet. I will say this, is that we're seeing higher lows on RSI, possible higher lows on Stokes, despite the fact we're down hard on the month. Weekly chart. A lot of support here where we close out the day. So I think the play here is just to simply wait. Does it hold? I don't see any compelling reason right now to go buying more Boeing, especially that it's not a big yielder. So I don't see a reason to go buying it right now. All I want to see is whether or not we hold the support level, or is the better support level down here? I don't know. Do I think it's going down to 120? No, I don't think that. If Boeing goes down to 120, it's all sorts of trouble. The market's in all sorts of trouble. Daily chart. What's going on today? Again, we bounced off of support. We still have lower highs, lower lows. There's really no reason to believe that the bottom is in just yet. Could it be? Sure. But the key to trading stocks that are this beaten up and not even necessarily oversold is you need to wait for the stock to stop going down. And that may sound overly simplistic, but it's true. All too often people think that they found the bottom and they're going to buy because it can't go down anymore. Then again, it goes down more. So I would want to see the shares bounce around here and simply stop going down. Then, as you begin to see a base build, nibble more on a breakout, buy more on strength, rinse, wash, repeat. So Boeing, we're just looking for support to hold. All right, I have a couple more to go over here. ZM, Zoom. Last time I looked at Zoom, it was a monster on the week. Not today, though. Well, you knew this was going to happen. We rallied up until the third standard deviation Bollinger Band, rejected. Daily chart. Broke support today. Now, what's probably going to happen tomorrow, and beware, is that they're probably going to rally it. They're going to rally it up to 478. It's going to tap it. You probably, unless the market's ripping tomorrow, it's going to tap it, sell off, and it could quite very well roll over next week. So don't go chasing the rally, please. If you want to buy it, either wait for a support level to develop or to get hit. You know, maybe this is a support level. I don't know. I'm not that smart. The market will tell us. If we manage to recapture 478 tomorrow and it's a strong market, great. Buy some Zoom. It looks good. But as it stands right now, we had a bearish reversal today. We did bounce off of support. We'll probably pop tomorrow. I'm worried about a fade. So wait for this to get retested a couple of times. And that number is 457.69. We have a breakdown in RSI. Stokes are rolling over. So just be careful. 4-hour chart. Not a bad close. You know, it was down, but a lot of stocks faded today. It's got relative outperformance versus the rest of the market. So I'm not ruling Zoom out as a recovery play. If the market rallies, if the market sells off, Zoom is probably going to go down. All right. You're welcome, Franklin. Anytime, buddy. And I think that is about it, folks. If I could ask you folks to please smash that like button. I'm scrolling through the comments, make sure I didn't miss anybody's symbol. If I could ask you to smash that like button, I'd really appreciate it. Thanks to all the viewers out there who remind me to say that every single time I am live, without fail. I really appreciate that. And with that, folks, everybody have a great weekend, a profitable trading day tomorrow, and join us Sunday Night Futures Live. There's a link below. Enter your email address. You won't get spammed, none of that crap. If you're already on an email list, don't enter your email address. You're going to get an invite anyway. But Sunday Night Futures Live, we'll review the opening price action for the week. That's Sunday night, not Monday morning. And we will send you out an alert. Use that link below. TrendSpider, you like it, 35% discount. Have a great night. Thanks for joining in. As always, folks, be well.